Welcome to the Dividend Talk podcast, episode 110, The Power of Compounding. Hey guys, welcome back to another episode of Dividend Talk. Today, European DGI will talk about a lot of CEOs, we'll talk about 3M, and also the power of compounding. See you on the inside. Yo, European DGI. How are you today?
After such an intro, you're setting the scene with a lot of high expectations about CEOs. But no, I'm doing well. I'm a bit tired after a whole week of work. I think the weather is not helping. It's like 30 degrees here, a lot of humidity. It's like, I feel just like also during the day, I'm just sweating my ass off. So I hope that this heat wave quickly passes over. I could do with some Irish weather here. It would be good for the garden, to be honest. We want to see everything compound, right? Also our plants and trees. So tell me, how are you doing?
Good. I tried to bring a little bit of energy because I think before the show we're both a little bit, I would say a little bit more down than usual. I know I spoke to you. I started this new shift pattern for 3 months where I'm working nights for the first time in my life. Just finished this morning at 7 a.m. So I'm a little bit tired trying to get used to it. But it's only a short term thing just to help the company out. But let's try bring some energy. So I did mention CEOs. So we do have a couple that we're going to talk about today.
Yeah, definitely. But we keep on grinding, right? This is our escape from marriage and everything. This podcast. So let's make sure that do a good one today.
Yeah, and it's a good reminder too of why I don't want to work in 10, 15 years time. Because I honestly could not do this for that long. Really could not.
Exactly. No, but tell me about CEOs. I mean, you mentioned something about Fresenius, yeah, our hospital provider. Let's say that I dumped just before the summer. I threw them out of my portfolio.
Yeah, I mean, I think I got rid of them as well. I had a small few shares. They've been horrendous. There's no doubt in that. But the CEO is now stepping down. Stephen Strom. He's going to quit. He's going to be replaced by the head of the drugs unit, which I think is Fresenius Caboy, if I remember correctly. So the guy, what's his name, Michael Sen, is going to fill in there from, which is quite interesting. Yeah. I think it's much needed. Fresenius, there wasn't a lot of news. There wasn't a lot pumping out from them. The CEO seemed kind of dead. Listening to some of the calls, you don't get much enthusiasm from him. There was no real sense of purpose. So I think a change is probably best for all parties.
Have you seen the stock chart? The last time they were trading at 25 euros, they're now trading 24.62, right?
Yeah.
Was I'm checking now, at the start of 2012, the end of 2011.
Wow.
And how long is this guy in seat? Also for something like...
since 2000, he's been finance chief since 2005 and CEO since 2016.
2016.
Yeah.
That was around all-time high.
Yeah,
that was 66 euros.
He's literally dumped. The whole company down. Like,
wow, he could. Man, on this farewell party, they can just give him the share price from start to now. Then he lost like 60-70% of share price value.
but I think I read that he's leaving on a good note, and I'm like, are you kidding me?
Yeah, a good note, a kick in the ass. Yeah, instead of like beaten down totally. Yeah, no, I mean, look, we don't care so much about the share price, right? The dividends have been growing actually quite well, so he has been rewarding dividend investors really well.
Yeah,
I sold it because for me there was like I didn't have conviction about the stock, right? It was nothing, just like every time there was news. It was like news that I felt like, "Meh," or there was nothing interesting
Yeah.
there. It was on the negative side, not on the positive side, and that was the whole issue for me with Fresenius. I didn't see a growth catalyst anymore, and when I was analyzing it initially, that's a bit, as a blogger, you often fall in love with stocks that you're analyzing, and you look at with pink glasses at it more sometimes. Yeah,
Yeah.
specifically if you don't know the company, it feels like you discovered something, and that was, I think, the case for me for Fresenius. I bought then a small initiating position, and I often do that to really then get to know the stock, to prevent me from doubling down too much in the beginning. Yeah, and then after a year, I felt like, why do I have it in my portfolio actually?
Well, they have some good promise, don't they? They cover a wide range in the
Mhm.
medical division. I mean, so there's definitely promise there within the four
Yeah.
divisions. It's just
They're
like,
biosimilars. Their biosimilars is something that
yeah,
I'm a bit bullish on, but then they, I believe, manufacture it with a Spanish company. And when I analyze a Spanish company, I mean, even the website was outdated. Yeah, and that also then doesn't give any good feeling. But PE ratio of 8 at the moment. If I look quickly up on Google, a dividend yield of 3.75%. If there comes a CEO in that can give a bit swung back there, then who knows, right?
I don't think it'll take much to turn these guys around. I mean, a little bit of good news and somebody with a little bit of enthusiasm might be able to push. And I mean, for the guy coming in, it's probably a good time. Shares are as low as you said back as 2012. There's not a whole lot much further that it should fall. Obviously, it could go to zero, but
Yeah,
in real terms, I wouldn't expect to see it go past maybe $20. And the
yeah,
only way for him should be up. But I'd be curious to see what his plans are, what he wants to do, and so on. So
yeah.
I'll
It
put it
it
back on my
sounds a
watch
little
list.
bit sounds a little bit a nice stock for the wheel strategy for you.
Yeah, so I have been doing that. So I sold them at on my chart. I've sold them at €30, and
Yeah,
I've been putting in puts in around 25, 24, and I haven't got a sign yet, and I keep going down as the price goes down.
yeah.
I'm getting a sign, and
You roll over.
I'm averaging down. So I think I have one in at the moment for around 22, $23. So
Yeah.
euro, not
Okay.
dollars.
Well, Fresenius is really an iconic company, and we're talking here about Fresenius, not Fresenius Medical Care, right?
Mhm.
Ticker symbol FRE. I believe this this German lady that was the entrepreneur behind Fresenius. I mean, she's an iconic lady, and it's really worth reading about the history of this company. And yeah, it's going through some bad times over the last 5 years because the stock went down the last 5 years with 50%. And I hope that this incoming person, can turn it around a bit. Then, right?
Yeah, yeah, and
Company deserves it.
I know a lot of our community still have shares in this company, so I hope for their sake that
Mhm.
he does turn it around. But I look, I honestly think he will. I don't think as I said, I don't think it'll take too much, but
Yeah,
it needs to do something. Just
exactly,
something.
exactly. Now, and where they also did something then is, of course, Royal Dutch Philips. They kicked out the CEO, Frits van Houten. It made my day, honestly. I also, Philips, I sold, right? I also thought, like, okay, they're not able to deal with this. I hate this American word, respironics or what, respironics, probably better. From the breathing
Oh,
devices.
respiratory.
Yeah, that those devices. And yeah, so they kicked him out, not for that reason. There's always a lot of blah blah blah. Of course, you want to respect people. It's a decent company with manners. Yeah, so they let him walk out via the front door. Yeah, I must actually praise him for all, because what he really did well was turning this company around and making it a healthcare medtech company, pure play. I think he really did that well. But he was just not able to manage that part of the company very well, and he's not a crisis manager. Now, my issue now that they have is they have now promoted Roy Jacobs, who is actually, on point to also solve this issue. Yeah, and we know that this device callback and such is just one big fiasco. like it is like it really feels like a bunch of students would even be disrespectful because students would do probably better.
Yeah.
It's just one big fiasco, and then promoting the person that's really having its hand in it sounds a bit awkward to me. Even if this person is the golden boy, right? Let's assume that the whole cosmetics are against him already. At least for me, because why didn't he fix it? What confidence should I have that he then will now turn it around?
Yeah. It's a tough one. It's another company trading at 2013 level, so potentially grossly undervalued. But there's a lot of work there to get. I think there's a lot more work with Philips to get it back on track than there is with Fresenius.
Yeah.
So I don't envy Roy Jacobs going into this position. I mean, he has a really tough task here to try and turn that around.
Yeah.
But and how are they going to deal? Well, the first thing is, how is he going to deal with it?
Yeah, a PE ratio of 5.7.
Wow. I mean, if you had seen a PE ratio of 5.7 on Philips 6 years ago, you would load up the truck.
Yeah. Exactly. I mean, €18.50. I mean, I have already enough broken companies as turnaround plays, like I said, like Bayer and Intel in my portfolio. So I can't have another kind of
What
risky company here.
what would you like to see from them, like to give you some optimism or hope to consider to put them back on your watch
What
list?
I would like to see within the upcoming 4 weeks, and after that I will probably buy, that they spin off this device litigation into Chapter 11 in America. If they do that, I could get back there.
Yeah.
But until then, no.
Yeah.
And that also shows me that this guy has a plan and want to do it like that. But they are now replacing all device, they're repairing it, right? So I don't know if it's easy to put this all in Chapter 11, because in the case of 3M, they just got rid of the earplug business with that effectively, almost, right? So yeah.
Yeah, it's a strange one. I can't see him doing that. I can't see him spinning off. If they're going to try and fix it, I don't know. We could be looking at another Intel here, maybe another
Yeah, and
trap.
yeah, and there was a report out there. I don't have the figures in front of me, but there was something written that I believe last year, and I'm doing really now by head, 21,000 claims, and this year 41,000 claims. And the question is, are there double claims in it? How much has been already accounted for? But honestly, I think they will still need to put in the numbers some additional reservations. They continue to do that. They kind of say like, this is probably it, but I think there will still come more there.
Yeah.
They are not used to dealing with American society and American court system with juries. I mean, they're screwed. They're really screwed.
They really needed an American CEO in there. So somebody with knowledge of that area. It looks like I don't know where Rye is from, but I'm guessing by the name he's European or maybe Dutch.
Yeah, he's Dutch. He's a golden boy, internal, homegrown in Philips. Climbed the ladders, as corporate as it gets. Now they need a crisis manager. What you can also do is like Howard Schultz with Starbucks. Yeah, he just comes back for half a year. Effectively, they kick Kevin Johnson out because he was focusing too much on buybacks and not innovating the company. So Howard comes in, stops the buybacks, starts increasing the salaries of the baristas. Yeah, so that's employees first a little bit again. Deals with the I said straight away, deals with the unions. Not in an elegant way, let's say, but from a shareholder point of view, probably in a good way. And brings in a new vision, and then they can select a new CEO again. And that's what Philips needs. Just bring in a crisis manager with one task, fix this shit, and find the proper successor then. And maybe then this Roy new one, he could have been that year like the right hand, and just observe and learn how you deal with crisis.
Yeah, I agree. You mentioned then 3M within that. they got some good news, I believe, didn't they, with their bankruptcy filing? I think they're allowed to proceed with this now.
Yeah. Well, at least the veterans in America, they of course appeal to this, right? They are fighting this because they know they just get less money then, right? Because there's certain money in this company there to deal with the litigations, and
Yeah.
when it's empty, it's empty, it's gone. And so they try to go to court to ask if they can stop the bankruptcy filing. But the judge said, like, no, the bankruptcy judge needs to judge this, and 3M has the right effectively to file for bankruptcy. So this is good. So it brings us a step closer again to the Johnson & Johnson situation. And I think this is good news for 3M shareholders. I mean, they have also still this other litigation pending there. So there's a lot of trouble there, of course, at 3M, but this is good news. And, we need these little bits of news, of course. And, it's all the time when I hear myself speaking, it sounds also so cruel, right? It sounds so cruel that there are people there that are deaf or half deaf or ear issues. And I can't even imagine if it would be myself, right? But on the other hand, if I would have ear issues, I don't need 50 or 100 million for that, honestly.
Yeah.
It's a bit maybe maybe that's so American, but I don't need 50 or 100 million. I could do with 5 million.
Yeah.
I could retire straight away.
But,
Even if they give me 500,000, I could probably go for early retirement.
I mean, a lot of that depends on lots of stuff. How big your family, who you want to look after.
Yeah.
These are veterans, so presumably they're going to pass on a lot of their wealth. We do know, like, some of the veterans struggle after coming out of the army and maybe struggle to get jobs and struggle financially. So maybe they're just trying to grab a piece of the pie. And you kind of read my mind. I was just going to say, when you were saying this is good news, I was going to say it kind of sets a dangerous precedent as well, that companies can do whatever the beep they want and get away with it. So in theory, they can do whatever they want and then spin off and bankrupt. So it does set
and they can, and they are doing, and specifically in America, I mentioned also on the interview that I had with Dividends with Russ last week, like, American system, in the American system, they value companies over people. And I think in Europe, we value people over companies. That's the big difference.
Yeah. And that's quite clear. But from a shareholder point of view, and we probably have to stress that a little bit, from a shareholder point of view, it is good news that this is happening. And
they're using the options that are available. Yeah, and that's how I look at it. And they are capital allocators.
They're not breaking any law. I mean, it's after going through a court system, and now it's gone to the bankruptcy judge. So they're not actually breaking any law. They're doing everything within the realms of what they can legally.
But if you look at it, I've got much more issues with Dieselgate. What has happened with Dieselgate with Volkswagen?
I haven't heard anything from that, actually.
But from a European point of view. Yeah, Germany is just too much invested in the car industry. So that's why I believe there was never really a tough case towards Volkswagen. They kind of got quite easily away with it. Just scandal after scandal.
Sweep it under the carpet. But money talks. Money talks. And
exactly.
The more you have, the more you can sweep under the carpet. But 3M are looking good. I remember I told you I sold my shares, so I did sell options on them recently, and then they had that sharp rise in price. So I sold for a profit. I think I made 75% profit in 4 days. I got in just in time, but they look like they're going to dip again. So I'll start selling options on them again. If I own these guys for 122, 123, I'd be delighted.
Nice. Yeah, I kept holding them. I think they can deal with it, but I don't expect dividend growth really. 1 cent, 2 cents, maybe next time again. So I don't expect too much dividend growth at the moment, but I'm neither selling them.
Yeah.
So let's go on, because we still have a few news items, because General Motors is starting to pay a dividend. Whoa! What are your thoughts about that one then?
It was really unexpected, wasn't it? They have reinstated the quarterly dividend. I think is at 9 cents per share, which is a big drop from what they had, nearly 76% reduction. So I'm sure if you were a shareholder hoping they would give it back, you're not sitting too happy. But they do have a buyback program of 5 billion as well. So it's a little bit of good news, but not great either for shareholders.
So I owned some General Motors
Yes,
like
I know.
5 years ago or something like that, or 4 years ago, and they were then trading around $30 to $35 to $40, and at the time already they were paying good dividends, of course, a low PE ratio. But this lady, the CEO, she was then really strongly buying back shares, and I haven't checked lately, but this company must have really, really reduced the shares significantly over the years, because they had a lot of major cash flow coming in, and of course it all dipped then with the pandemic. Yeah, but if you then also saw the pandemic time, the stock dipped to $20 and then grew that year to $63. So it's now around $40 again. Look, for me, people always talk about, let's say, oil companies. You need to buy them at the dip of a cycle. You could argue the same for car companies, but the main difference between oil companies and car companies is that with oil companies, the dividend is way more safe than with car companies. And I think it has to do with the margins in the business line.
I mean, I don't keep up to date with General Motors, but are they pushing towards electric as well?
Yeah. Quite well, I would say. With the Volt, I believe, and then also the new lineups. Yeah, no, they're doing quite well. I think they will be a serious competitor generally in the market. So I'm not afraid of them. The
Yeah.
CEO is really, in my opinion, she gets this stuff. Yeah, from what I always read in the news, she really gets it. She's not crazy.
It is kind of a weird time though to reinstate the dividend, given the threat of we have a recession, inflation's at an all-time high, which means that there's a lot less discretionary income coming in, which
Mm,
means usually the sale of new cars usually drop around that time. So to me, it seems a bit strange considering if they do hit more tailwinds, are they going to cut it and get rid of it again? And that won't look too good on the company either. It'll kind of make this decision look a little bit rash and silly, I think.
yeah. Yeah, look, I believe was it not in 2008 when they were effectively bankrupt?
Yeah,
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 yeah. I mean, the company is so much more better positioned nowadays. But it's just you just cannot trust on the dividends with General Motors, neither with Ford. These are car companies. When there's a recession, effectively their cash flow evaporates,
yeah.
and then they are forced to cut the dividends either with wide margin or with small margin. But it's just not safe with such companies, and yeah, that's why I'm staying away from it. But I found very interesting news that they were, I said, yeah, back again with the dividend.
Interesting, but strange timing on my behalf. I certainly probably would have held out if I was the woman in charge.
Yeah, true. Okay, next then one, earnings. What about that one?
Yeah, some of the big consumer staples over in the US reported, Walmart and Target. I mean, look, Target, I don't think there's any great surprises there. Share price took a little bit of a drop again. Sales grew, which is good, but of course they had a huge inventory, didn't they? Which we knew from the last quarter. So they were selling off items at like discount prices, which for consumers, especially in this kind of market, is great. But I mean, the cost of sales went up nearly 3 billion. I mean, that's got
Yeah,
a hurt, which
that's
had
inflation.
had a negative impact on operating income, and then earnings per share dropped nearly 320 or thereabouts. So I don't think it's any surprises that their share prices drop. But look, we can see inflation. We can see them getting rid of huge inventory, slash prices. But they've maintained their outlook. I don't think it's too bad. I think now they're kind of at I would say the bottom, and we might see it flatten out maybe over the next 2 quarters, and who knows what will come in terms of recession. But to me, they look near the
Yeah.
bottom and look promising to me.
Yeah, and of course they also did a big dividend hike, right? I believe they paid last year 90 cents, now $1.08.
Yeah,
I mean, I really, really, actually, honestly, I really like Target. I still regret that I didn't buy Target in the 60s or in the 70s. When was it? When Amazon was going to bankrupt all these stores.
yeah,
They did the remodeling, and I thought they wouldn't be able to pull it off, but they did, and I really was too greedy there. But that's for me so difficult because I hardly ever went to a Target, maybe once or twice in my life. So I don't really have enough feeling with the brand, right? That's why I'm also way more invested in Ahold. But Target, if it comes for me attractive again, looking also at the yield, I might really consider it. It's a company that also, the video from Ian Lopuk's wife on this one, right, on YouTube, she she bought me with her story about how women look at Target here, right? So she really bought me with this company, and she was really big fan of it. And when I heard her talking, I felt like this is a consumer review,
yeah.
and yeah. So at the right price, I would like to own some of this.
It's funny when I hear you say that you can't resonate with this company, because I'm quite similar. But my niece, she's 6 years of age now, and she has been obsessed with Target for the last 3 4 years. Obviously through YouTube and what she's watching on TV, it's all Americanized, isn't it? So we're
Yeah.
getting more and more Americanized. But she was obsessed with Target, and so much so we got a Target T-shirt. My sister lives in New York, so I got one sent over, and so much excitement on her face. But I mean, I just thought it's crazy that someone on the other side of the world is getting excited about Target. But I mean, it's just been fed into the kids from a younger age. So maybe they, from what they watch and what they see, will resonate
Mhm.
more and more with companies like this. I mean, the
Yeah.
world is getting smaller, isn't it? It is getting really small.
And last time I checked, it was still
I knew
for
I,
40,000 kilometers.
I should have expected that answer. And what about Walmart? So what are your takes on Walmart?
Yeah, so Walmart effectively, I mean, everything declined. Yeah, so okay, net sales, let's say, grew, but earnings and everything declined. I think something around, what was it, 9 or 10% even. Um, but the stock price did well. Why did it well? Because they are guiding less decline. So they were for the next quarter, for instance, they were how is it, predicting a decline of 9 to 11%.
Yeah.
Yeah, and where the consensus was 11, and sorry, where the consensus was 11, they're now thinking about 9 to 11%. So this is just like looking good for investors. That's why the stock quite well responded to it. But these companies are being butchered at the moment with inflation. It's so hard for them, and they're not really able to pass it on. As I'm feeling, I also, and it was really good comment what someone made on social media, that they have a lot of apparel items and such, like non-food items that they
Yeah.
depend on. Yeah, and there's a lot of inventory there. They need to sell probably at discounts and such, so they hardly make profit on that. Yeah, so that's the problem of these stores in America. And yeah, if you then compare to Ahold was just rocking it, right? And that's the big difference, I think, between these companies right now. Walmart for me is so far from being attractive. Also,
Yeah.
looking at their yield, that I don't even consider even close investing in it. But if Walmart would ever be at a 3%, they traded there also like 4 5 or 5 6 years ago. So who knows? I mean, for me, I'm a big fan of consumer staples. I like them. Cash
Yeah.
flows are predictable. Dividend growth is therefore also quite predictable. Some of these companies, they have still growth in them, yeah, in whatever shape or form it also is. So I love owning consumer staples like these, really, but at the right price.
Consumer staples. I mean, there's no real brain needed to understand that you need them no matter what the conditions are.
Exactly.
You need shopping. So I mean, they're always a safe or bet.
Yeah.
What I'm quite surprised, actually, we have Walmart International, which net sales of 24 billion. I don't recall of a presence they have in Europe. I know it mentions here Mexico, Canada, and China are the largest, but I don't know if there's a Walmart in China or in Europe.
I've never seen one, and I thought there was none.
Yeah, but I'm sure they must. They must have. If they have an international market, surely they have something in Europe.
Yeah, but international for them can also mean Hawaii. Which I believe is officially a state, so maybe Puerto Rico.
Yeah, Puerto Rico or so. Yeah. But,
Yeah.
Interesting. No, that it's good. Consumer staples. I mean, I don't think there's any great surprises in any of these two companies. I think we could have predicted that long ago. For me, probably wait until the end of the year before looking. But I might start setting options on Target. Target are starting to look a little bit attractive, but I still think they might drop every time there's earnings next quarter and the quarter after, and then we might start to see it.
Well, you know, if I need to believe Graham Stephan and how is it, the other one from is it New Money or something like that on YouTube, they have like 1 million followers on accounts. Within 30 days, China will collapse because of the real estate bubble. So we will all go to shit. World will go to hell. So I think you get ample opportunities from the 20th of September to double down on Target and Walmart. I mean, what a shit on this. I mean, they suddenly discovered all that. I said China's going down with the real estate bubble. I mean, this was in news a year ago, but suddenly became a hype, fear mongering. I mean, for me, this really needs this needs to stop. I mean, come on, guys. We're talking here about someone that lives in Texas, right? Drinks iced coffee, and then suddenly becomes an economist on the China situation. I mean, fuck off.
I mean, we're all like that a little bit. I mean, everybody.
Yeah, okay, but this, you know, at a certain moment, you also need to look at yourself and think, like, okay,
what do I really know about this? The answer,
exactly.
the answer is probably not a whole lot, buddy.
Exactly. I mean, and I let's say like that. I think we take ourselves a little bit with a grain of salt, and I think people can also sense that when they hear us. Yeah.
Anyway,
fucking hell.
Before you get carried away, let's talk about the power of compounding. I mean, we had this wonderful person, Albert Einstein, compare it to the wonders of the world. I think he called it the eighth wonder of the world.
It seems to be not true, right? That he actually called it like this. It seems to have just grown into society that Einstein said something like that, but there's no recording or evidence from it as far as I know. But it sounds nice, so I agree with you. It isn't. It is really a world wonder. It should be on the UNESCO list. So, but look, why we also wanted to talk a little bit about this, right? Because in the end, we talk a lot about stock market, just like for the first long part of this podcast. But in the end, really the only thing that matters to me is my dividend growing year over year, right? I want my dividend income to beat inflation effectively this year. Let's say I'll take a pass on this on that one. But generally, this is what we want. Yeah, that because we don't want to lose earnings power in retirement. And you know, which strategy has this? Maybe real estate investing, if you set your contracts up well so that you get the escalators in there. But otherwise, the 4% real rule doesn't do it for you, as an example. So for me, this is really beauty. And then when we talk about compounding, there are a few aspects for me, right? When I talk about compounding, compounding is also earnings compounding, where the company just grows and therefore the share price goes up, or the earnings go up, the free cash flow goes up. And that's also for me compounding, and more also from a total return. But when people often forget about compounding is the reinvesting, because you see these calculators online where they say like, okay, if you invest on it $100 today and then it makes 10% annually, you will have this. But if you start thinking about dividend and reinvesting at the same time, you know, that's like, for me, that's like compounding on steroids. And I think that's also what we can see in our own numbers, right? And specifically also with the cash that we throw at that behind it. So for me, I felt like when we were thinking about the topic of the show for today, we don't sometimes speak enough about the basics because we feel like we have discussed this already so often. But for me, I think we should remind ourselves almost every show about this, because this is really, really the heart of dividend investing. It's the compounding behind it. So I'm also really curious, like, how have you experienced compounding so far on your journey?
Yeah, I mean, we talk of dividend investing, don't we, as slow and steady. I don't think anybody
Mhm.
expects to get into dividend growth investing and get rich overnight, unless you're going in with a shit ton of money to begin with. I think most people in our community are probably investing monthly, yearly, with relatively small cash in the grand
Yeah.
scheme of things. So in order for that to grow, we need returns, but we also need this magical power of compounding to help us. I mean, for me, it's incredible to see the growth that I had in 4 years. But even without looking at my portfolio, I think I seen on Twitter today, there's a Canadian investor, is it Toucan or
Yeah.
something, investing, and he shows his. I think he's going to earn something ridiculous, like 30,000 in this year, and he started off with 200 or 300, and that's over a span of maybe 12, 15 years. That
Yeah.
really shows it compounding at its best over a long time period. Because I think with compounding, time is
Time
important.
is of essence. Yeah, and it's always in the tail, yeah,
Yeah,
where it gets. And the
yeah,
tail is always your last year until you die.
yeah. And like they say Warren Buffett, was it 95% of his wealth was generated after he's 65 or something ridiculous
Yeah,
like that.
in the last decade,
Yeah,
probably. Yeah.
but that just shows the power of it. But if I just look at it overall, like, it's 2022, my dividends already is €34 off what I earned in the whole of 2021.
Yeah.
Some of that is obviously naturally from investing, because I invest every month, but I do have a period. Um, I do have a portion of that. I mean, that is just natural growth rate. Now, my target is around 5-6%. I'd like it to be as high as high as possible. Obviously, currently it's around 4.5%, which is not too bad. So that's my dividend growth rate from natural, without me putting in any more money. That's much it is, and I have a 4.5% average portfolio yield. So I reckon on those numbers, I reckon in maybe 9 years, I will probably reach my financial freedom goal.
Wow. But that's awesome.
Hmm.
I mean, wow.
Like,
Yeah.
and the only thing, and I know we have a question on this later, is I haven't adjusted it for inflation yet. I mean, we're only just in this. I'll probably wait till the end of the year, reassess, maybe set out my goals again, and maybe add to
Yeah.
it. But before inflation, from what my goals were, what I'm spending, and to be honest, I know inflation has gone up, but I'm spending in and around the same. But probably discretionary items has come down slightly, but my bills have gone up in terms of gas and all that. But I think overall it's still around the same amount of money going out, because I'm saving the same amount of money, so that means I'm spending the same. So I think even with inflation, I think I can hack it. But we know over time I probably will have to increase my expectations. But
Yeah.
as of now, about 9 years, I could be sitting on a beach and not working my shift work.
Yeah. So, what for me is really interesting always to think about is that, my portfolio is already 6 figures,
Yeah,
right? Of course, not on the high end, but still in kind of, let's say, the lower percentile. But I know already that if I just stay healthy and reach the average age of population in Europe, I will be a multimillionaire just from the compounding.
it's crazy, isn't it?
It's really, it's. I mean, if you would have ever asked me, like before I started investing, if I would ever be a millionaire, I would have said no. It's not possible. Maybe if my house one time would get worth so much after 40 years or something like that, but otherwise, not possible. And now it's just like, as long as I don't touch my portfolio, stay healthy, no sudden, not that I need to withdraw because I know a family member gets handicapped and you need to pay high medical bills. I will be a multimillionaire. Not even one. It will be two or three. Yeah, and then I'm not even talking about reinvesting.
I mean, that's a crazy thought. I think most kids at some point in your life would have thought about being a millionaire. Like, that's,
Yeah,
isn't it? It's always seems like a pinnacle just to be a millionaire, but to be a multi-millionaire on top of that, just from investing and reinvesting. I suppose the reinvesting is where compounding
Yeah.
really helps you.
Yeah.
But for that to make you a multimillionaire is quite something.
It's crazy, right? Yeah. And I don't know if you have the same as well, but I'm sometimes saying that to my son, but I'm not sure if he always appreciates that. But sometimes when I buy a hamburger or something like that, and it's like, I don't know, 30 zloty, which is relatively pricey one here in Poland. It's like €7.5. I'm thinking like, okay, the rule of 72, let's say at a 7.2% growth rate, it will 10 years. So, and then you end up thinking like, oh man, in 40 years from now, this burger would have probably cost €100 or something like that. And then I tell my wife, that I'm now eating a hamburger of €100. And she looks at me, she thinks like, what the fuck are you talking about? But I really regularly think like this when I'm buying items, and it's not always a nice, because you end up thinking like, I'm not going to buy these shoes for €1,000. No way, I don't need them. I can, I will just pitch the hole in there, and I can do another season with them.
I don't think I'm as bad with small ticket items like hamburgers, but certainly with trainers or something as big as a car. I remember looking at a car, and we had a choice going between a 2016 and 2018, and the difference is like about 7,000 or 8,000. And in my head, I'm like, oh no, I'll drive 2016. I'll save my 8,000. I don't care. That could be worth 40, 50,000 in 10 years' time. I'm not doing it.
And I one time calculated for my son. He wants an iPhone 13, and I gave him the price of what it is today, but in zlotys, right, Polish zlotys. And then I said, okay, let's assume that you would have invested, and let's let it grow 10% annually. I said, that by the age of 65, just from that money alone, you could be a millionaire in zlotys. And he was looking at me. I said, I can be a millionaire? I said, yeah, but then you won't get an iPhone for your birthday. And I said, no, I want the iPhone. I felt like, damn, he's not my son.
There was a great experiment with kids, wasn't there, with sweets? They put them into a room, and they put one sweet in front of them, and they say, if you don't touch that, you can have as many sweets as you want, or something.
Yeah.
And then they leave the room. It's just funny watching the kids. They're looking around, boom, go straight into that.
My son wouldn't eat a sweet, but when it comes to technology, an iPhone or something like that, no way. I can't blame him. But one day I will force him to understand this.
He's too young to have any mass on money, but at the moment, let him enjoy it.
But hey, about my strategy and compounding, then maybe also. So, I work with a certain number, right? That I need to have at retirement, a certain income number. And when I modeled my strategy, I was using that number already also as a monthly investment. At that time, it was approximately, let's say, 50% of my of my income. I wasn't able to save 50% of my income at the time, maybe 20%, 25% when I started. But nowadays, I'm able to save 50%. So I'm also able to deploy more than what my strategy, than the strategy I calculate. I didn't know that my salary would grow faster than my own estimations, which is, of course, a nice thing.
Yeah.
And that's also, by the way, learning. When you think about compounding, you can only save so much, right? If you are just a high performer at work, and that's what I would recommend everyone, your compounding comes really from there, from your increased savings rate. So I would always invest, because in the beginning, especially, I had it when I started, it's so easy to fall into the trap of starting to daydream about being already retired, but you aren't. You still have like 10 years. So it's really important to continue giving yourself this energy, this motivation to excel at work, right? You can't slack there, because it only impacts potentially even negatively your strategy. Now, but at the moment, I'm at a 50% savings rate. Actually, last year or during the pandemic, I did 66%, which was crazy. I think now it will be around 50% with the inflation.
Yeah.
My strategy also assumes 3.25% starting yield on cost, and then a 6% organic dividend growth going forward. 3.25 is an average. It can be sometimes 2.75, but I also have higher yields that I purchase. Then I assume a 2% annual contribution growth, what I put in, 2% growth from salary hikes and such, but also 2% inflation. So the real growth would be nothing. From the point of view, and with that, I would be within 15 to 16 years in early retirement, depending whether you also take tax into account. At the moment, my projected annual dividend income is 45% of my target income that I need. So that's approximately where I'm at the journey, and I believe half a year behind plan, because in like few years ago I underinvested, and you see then also the negative impact of compounding. So, but having said that, if you look at it, I mean from an, let's say, an organic growth, last year I did 4.3%. So you did 4.5%. So you outperformed me. What is important to know here is that if you look at my top 5, there's Shell in there, ExxonMobil in there. Those have not been growing their dividends really fast. There was even a dividend cut, in 2020. But I have also Microsoft, and that's growing, let's say, with 10%. But if you have the absolute dividend income, because I have got more high yield, low growth, it's hard for the fast growers to pull up. This will probably come in 5 to 10 years. You will see that the low yield, high growth will start outpacing some of the others, and then my organic growth should pick up. But I'm really proud with this 4.2%. My average yield of the portfolio at the moment is 3.5%. So I've got a much lower yield than you have right now. And that's because of the inflation in Apple and Microsoft, as an example. But I've got also some Alibaba and Google and Meta in my portfolio. But then if you look at just year-over-year performance, I mean, my dividend income, I'm now also I didn't calculate the Omega Healthcare and the AbbVie dividends yet, but I believe I'm now in August also already surpassing my dividend income from 2021. So that means I still have, what is it? 4 months left for the rest to beef this up. And I mean, this is of course crazy, right? And I do know that some part of this is also with the dollar in there, of a favorable dollar. But look, if I look at my numbers, just the year-over-year differences generally, I mean, 10% in February, let's say, 43% in March, 46% in April, in May, 104%, and May is my biggest month. So 73% in June, 20.8% in July, which is generally already a low month for me. So, I mean, look, I'm now, what is it, the 8th year on the journey, and I'm still kicking out these numbers. This is insane. Yeah. And this is just the power of compounding. This is the compounding of salary growth. Yeah, because 5% salary growth today is much more than I got than 10 years ago. And if almost all of that goes to your savings rate directly, I'm not increasing my savings rate with 5%, but with 8 to 10% straight away. All compounding. This money goes back into the investments, compounding. The dividends being reinvested, compounding. I mean, this is it, right? This is really for me, a path to wealth.
Yeah.
Excel at what you get paid for, your income that you really need to put blood, sweat, and tears in. Make sure you're the best in your job, that you and be in a well-paying industry. Work at a company that has tailwinds, not at a declining business. If you work at IBM today, okay, maybe the IT part is growing just because of general market trends. But if you work in those declining companies, you will only see cost cutting. It will always be difficult for salary hikes. Take those with tailwinds, be a performer there, top performer, work on that part, because it's really, I mean, ramen noodles, they don't taste so nice anymore after a year, I can tell you. So, I mean, but this is all compounding for me. It's as simple as that.
Yeah, and even a better example is it took you 9 years to get 45% of your target income. It's going to take you 6 years to get the remaining 55.
That's what I hope. Yeah, exactly. That's what I hope. So, I mean, I think we spoke about the other day, but if you're on 20% coverage, and you grow with 10%, you have 22%, right?
Yeah.
But now at, let's say, 45%, 10% is 50%. So, that's 2.5 times more, just potentially organically, right?
It's
Yeah, crazy.
it's crazy. Numbers and maths is good, guys. Numbers and maths is good sometimes, but it's for me, just looking at where you at in your journey, and I'm comparing to where I am to where you are at that particular time, and it's not too far off, which is quite encouraging. Seeing, I think you are an extra 3 or 4 years ahead of me in the journey, so
Mhm.
it's pretty encouraging and inspiring for me to see what goes. And I think that's the key, isn't it? Sticking at this is the hardest, but the
Yeah.
longer you stick at it, the more rewards you will get. I think that's
Yeah, and I would say that also we are kind of regular middle class income guys. We are not
exactly.
people that are being fed with a silver spoon. I did got nothing from my parents. If I got something, it was debt. Yeah, everything earned myself just from my job. Just a regular middle income job, not a lower. I'm not a factory worker, of course. I work in IT, still middle income. So, I mean, this means just how much people in society can achieve the same. I'm really convinced of this. And most of the Western people in the Western world don't need to be in financial troubles. And it pains me to see this. There's this YouTube channel with this guy that is having conversations with all these folks. And I think this one is in Austin. And if you hear it, I mean, how much they are in debt, credit card debt, car loans, all of this shit. And then if you hear what they earn, and they earn more than me sometimes, right? And then they're like 5 years out of college. Of course, they have a bit of higher costs in some things, but it pains me to hear this, right? It's really a mindset thing, really mindset thing. I think middle class income people that start on zero when they start working, they don't need to be in debt other than when it comes when it is to their house, and then you just look at the interest coverage ratio of your salary.
It's funny, isn't it? Middle class spend all their time trying to look wealthy. They buy new cars, new phones, top of the range clothes. And you have really wealthy people trying spending all their time trying to look poor, so
Yeah,
nobody bothers them. It's funny.
exactly. Yeah. So look, for me, this is always really inspiring just looking at these numbers. I mean, I wouldn't say I can jerk off on it, but it is like for me watching at the Mona Lisa.
Okay, and on that note, we'll move on to the listeners' questions. It's a good note. And one of them actually is from Morris, and it's reflected what we're saying. So it's how is inflation impacting your paddy number and your time horizon to get there?
Yeah, so Maurice, if you look at it, I think it has impacted probably with 5 to 8%, maybe something like that, because I'm also having a lot of euro stocks in there. So then here I'm probably talking more about the currency. And when it comes to inflation of not my paddy number but my target number, yeah, so my retirement date, I probably will need to reevaluate it next year. I'm giving this year a pass because also, for instance, I did with 2% inflation, and most of the years we didn't have that. So yeah, I'm looking at it from a Dutch perspective. In Poland, we had it here, but I already took that into account in my estimations. So I give this year a pass, but if it's next year the same, I will need to adjust it, and I will not
Yeah.
be able to keep it. Probably I need to work a year longer. It's simple like that.
Yeah, I have to check what I wrote down. I think I put an inherent 2 or 3% average inflation yield into my final projected
Yeah,
number. So, I mean, as I said, I haven't calculated, I haven't panicked yet at the moment. I expect it to average out over time. But of course, if we
yeah,
start to seeing high inflation for a number of years, then of course that will
yeah.
have to
Then we
go.
just work longer.
We just work longer,
Yeah,
or make more money.
yeah.
Dividend newbie, any thoughts on the 3M exchange offer?
Well, I'm a 3M shareholder, right? Not really a thought. The Giro doesn't really inform us about any offers, so there's
Yeah,
also nothing to decide about. But maybe for the listeners that do get these offers, so I believe this is because of this. What he's referring to is the split of exchange offer for the food safety business. The stockholders are expected to receive about $107.53 of Neogen common stock for every $100 of shares of 3M. So effectively, you get a 7% hike if you take that offer. But really, do you want to be in the food business of 3M? I find the other part of 3M way more interesting. You get the litigations with it, so it's also a bit exciting. But yeah, no, I don't know. What do you think?
I mean, who's making that decision for us at the Giro? I mean, we don't get notification. We can't vote. I know you can on Interactive
I think
Brokers.
we don't own the shares.
Yeah, I think that's the problem. Yeah, I'm starting to.
It's in such a clearinghouse or something like that. So
yeah, which is quite strange. So I wonder what they're going to choose. Probably take no action. I would say. So we'll end up with the new shares of Spinco. For me,
I've no clue. I mean, I can't even be bothered about this, honestly, because 3M for me is like such a on the shelf stock. I hardly look at it.
Yeah, I'd probably just wait and see if I get a sign of shares or what and see, and probably sell them then at that moment. I think there's a 7% discount. So we don't know what way the stock market will be by the time it happens, but certainly
I find the Activision Blizzard, how is it, margin that you can get from the Microsoft acquisition way more interesting. Yeah, so I was thinking actually about that. Should I buy some Activision Blizzard so that I get Microsoft shares then in return at a discount? But then I would need to do it when it's also at a better price, so that I get kind of a margin of safety on my Microsoft acquisition. So I was thinking about that because I don't see Activision Blizzard not getting approval from the regulators.
I mean, it's been bouncing around 82. It dropped to 73 at one point, and it's back up in around the 80 mark. I mean, what's it selling at 96?
Something like that, yeah. So it's still quite a nice margin there.
Yeah. Dividend.xe wants to know why we think Medtronic is a quality company. And I think you wrote an article on these guys before.
Yeah. So a quality company, not necessarily quality stock, but look, Medtronic is just one of the best medtech companies in the pharma space, right? We're just talking about Philips. Can you really compare Philips to Medtronic? No way. I mean, they invented the pacemaker, as an example. Their company is really, really, I think, good in this area. It's growing, but from where I'm struggling a bit with this company is that their cash flow is not growing as much as I would say, and it always gets a premium for the market that I disagree with. But yeah, Medtronic as such, I mean, for me, it's, I believe, a leader in most of their markets here. A strong moat with the brand. Would you like a pacemaker from Medtronic? Medtronic with 40 years or something from a Chinese brand or something like that.
Yeah, exactly. You
put this in your body, right?
Yeah, they're a good Irish company, or they call themselves Irish to avoid tax, which is why I love them.
Which is also quality. Yeah. Yeah, so that's it really. The history around the pacemaker, the innovation there, and how they build out their business is just astonishing. Market leader for many of their products, number 1 or 2 position. They just need to manage their cash flow a little bit better, but other than that, yeah, high quality company. But from a stock point of view, I'm not so happy with what I see.
Cool. Question from Future Dividends: when you look in the market and don't see any values, what do you do with the cash? There's no point in asking you, because you have a history of just holding on to it and not spending it.
Oh, thank you. So what do you then, Mr. Wise Boy?
I mean, I don't think that. I think there's always value to have in there. It just depends on what you're looking at. Personally, I like to try and stay in the habit of just investing. So if I don't see something of value, I just pick one of my top companies and throw the money in there. But
I do the same. So I force my money from my salary to invest. If I don't see anything, I've got such a little bit of a screener for my desired portfolio. There's 40 stocks, and I just have a simple formula saying like, okay, if more than 2.75% and if less than my target as a fair value price, then I'm not picky and I just slash the money, and so the money works for me. And there are always few like in the green then right after my screen. There's always 2 or 3 stocks.
And then the last question we have is from BTO5. What do you think about Sanofi's recent drop in price?
Oh, this is we're going to talk now about their pipeline.
Yeah.
They didn't get approval this week, and this is not looking good for their pipeline. I mean, I'm still surprised that only dropped like 5% or something like that. But this looks bad for Sanofi, really. And I mean, you really need to understand pharma a little bit here and what's happening there. But this was one of those really promising ones that they were really looking into, and they didn't get it. And it also created a little bit of a shockwave through the pharma industry. What happened there, because many companies are targeting those molecules and those diseases, right? So, and Sanofi was kind of seen as a bit of a leader in this, and yeah, no, this hurts for Sanofi's shareholders, really. And this is for me always the point. By owning pharma companies, you need to understand what they have in their pipeline, what's upcoming, because Sanofi as a stock that literally went almost nowhere in the last years, but is attractive always from a yield point of view and such, right? But this is a hard pill to swallow there over at Sanofi.
Yeah, like you're saying 6%, 5% drop. It's actually around 15 from the beginning of August.
Even more.
They've dropped from 95 down to just around 80 euro. Which is quite a drop. We're talking about the breast cancer drug, isn't it, that hasn't got approved?
Yeah, exactly.
And they've dropped all studies on it. So I know it's a difficult one to take and to analyze. And as you rightly said, you need to understand pipelines in this. And do you know what? It's probably one of my barriers with healthcare and why I don't have a whole lot of healthcare in my portfolio, because it's really hard unless you're in these industries to understand the pipeline. I mean, you can read it and you can read it from their perspective, but you never really understand it unless you're working in
you need to know a little bit of molecular biology and such, and chemistry, and to really appreciate what's in the pipeline. That's also why I have some pharma stocks, but that's why I'm also diversified in that I look at the blue chips. And I study the risk of the pipeline, and that's my complaint also a little bit about Johnson & Johnson. I got some pushback on that one, like, how can I say this about Johnson & Johnson, which is a AAA company, but they're mainly a biotech company now, and all their sales came from a single drug. So this risk is there, and it's not priced into the stock. And you see what happens to Sanofi now. There will come a time that Johnson & Johnson will be struggling with their pipeline. Simple as that.
Yeah, I mean, that's the future of the business. I'm just trying to read an article here from Reuters. Sanofi CFO says stock price plummeting is grossly overdone. So clearly they're not happy about it in the board of Sanofi.
Of course not. He sees his options and his retirements going in shit. So no. I mean, CFO, come on.
Yeah, it's a hard one, but hey, look, they are trading now at a yield of 4%, which is decent for the company. But again,
so if you believe that they can, just replace their pipeline, let's say, over time, I think this could be a really nice entry point. But Sanofi doesn't have a good track record of lately, and this one was like one of their most promising, and the trial failed. So many investors need to lick their wounds now with this, because there was a bet there, right? An assumption. So
okay.
Didn't he also had a question around Inditex?
Yes.
Part of your? So I think Inditex is Zara, right?
They own Zara. Yeah. So I know Phil, who's been on this show before. He wrote an article on my blog many months ago, maybe 2 years ago now at this stage, and he laid out a good case for the company. But I mean, I think they cut the dividend, and I've never got around to keep.
No, I was disappointed with that as well. A bit too quick, I think, also with the pandemic. Yeah, good. Hey, this is it then. Lots of news today that we discussed, Derek. Also about compounding, the thing that always you can wake me up for at night, and Thanks so much.
Perfect. And to all our listeners, again, thank you. Thanks for all your questions. We do appreciate them. Sorry we didn't get to Facebook. That is my fault. I don't have Facebook on my phone. But we won't forget you guys next week. See you all later.